Traders, and welcome to Hit the Mark Trading's daily US dollar index review. My name is Martin Rimes. Today's date, Monday, December 16, 2013. Hey, check out hitthemarktrading.com. Take a look at what we do, especially the boot camp. That's going to be your best way to shorten the learning curve to trade trend and momentum. While you're there, go to the contacts page, and on the contacts page you're going to find the ability to sign up for Rooster Call. Now, what the heck is Rooster Call? Well, this is my early morning note to clients. Basically, I look at the charts, I look at the overnight action, I look at the news wires, and very briefly write a synopsis of what I feel is important for us to be looking at. And it's kind of geared to day trading, but if there's something that we've been looking at as a potential swing trade, I'll certainly update it. Okay. Now, remember, everything I mentioned in this video recording is for your educational purposes only. Please do not construe anything that I mention as an offer to buy or sell any type of currency futures or options on currencies. Let's go to the charts. Okay, wow. So Sunday night, gosh, we talked about that, we'd probably see price go to the first level, then down here, that's what the arrows are for, and boom, we hit it, okay? But as I mentioned, the US dollar is really not, we're not talking about a lot of money here, okay? So just drop in there, that's $100, okay? I think what you should do on US dollar index, if I may be so bold to make a suggestion, just take a look at the daily chart and you can see this consolidation. Now normally we would say, okay, well, we expect this thing to go down, but gosh, we've got this FOMC meeting starting Tuesday and culminates on Wednesday with FOMC minutes. Everyone around the entire world is waiting to see what the Fed will or will not do with regard to potential taper. So there's lots of emotion about this. Anytime there's a lot of emotion around a certain event, we are susceptible to knee jerks. And that means just out of the blue, a sudden one-day hit down here to support, or suddenly a one-day hit up here to resistance. This is the knee jerk, and we've got no way of knowing what's going to happen. We do have a downward bias on the indicator, and we do certainly have a downward bias on the moving average. Take a look at the weekly chart. Now look, we just looked at this on Sunday night, so don't expect any great shakes. What we said was if we see a drop, we're going to go to 79,500. And monthly chart says, hey, I've been doing this all couple of years here. Doing it, loving it. In other words, I come to 79,500 and then I pop up. Okay? And we expect the same. Okay. So let's go back to the intraday chart. It's my opinion that we're going to just trade very cautiously in front of the FOMC. I really believe that. So I really suggest that you're looking for, especially if you day trade, you've really got to find something moving, okay? I mean, that's rule number one. So what are our expectations? Well, we've got the main floor pivot right here. I hope you can see that. Right there's the main floor pivot. And, we know that if we drop for a retest of the low, that's going to take us right to a floor pivot for tomorrow. Okay, right in this area. If we decide to go high, Well, we're probably going to be looking at a run, oh, just up to here. Okay. Now, anytime you've got the moving average on the floor pivot, you got to be very careful. This is like a meat grinder. And guess what? You're the meat. Okay? I implore you to find something else at this point in time. And once we find on the daily chart that we are making a move and we're breaking resistance or breaking support, I'll be all over this thing. But at this point in time, FOMC is the prevailing thought. Okay? All right. That's all I've got for tonight, and I'll talk to you tomorrow. I look forward to having Rooster Call delivered to you. Don't forget to sign up. Bye-bye now.